Greetings, members one and all of the Salivation Nation. Gold ticked up a bit higher, but really at the end of the week with a loss because of some good economic news. And that is a pretty good reason to celebrate with lower gold and silver prices. I know a lot of us would like to see the prices go up, but when they're staying pretty steady because of good economic news, well, I think it's reason to celebrate. Let's take a look and explore. This article comes to us from Market Watch. It says that gold has ended higher and avoids a 3-session skid, but really it notched a weekly loss. Gold futures ended Friday with a modest gain, but booked a weekly loss, as investors mostly favored assets perceived as risky, like stocks over safe plays. Gold for June delivery on COMEX lost $1.30 or 0.1% at $12.95.60 an ounce after settling lower in the past two sessions. The metal booked a weekly slide of 0.2% based on the most active contract, according to FactSet data. Meanwhile, May silver lost 0.13%, lost 2 cents or less than 0.1% at $15.08 or 9 cents an ounce. For the week, the metal shed 0.2%. Gold gained on Friday after briefly seeing its losses intensify after the March unemployment report came in at a better-than-expected 196,000 jobs, rebounding from a paltry gain of 33,000 in the prior month. The increase in new jobs beat the 172,000 Market Watch forecast, and the jobless rate was unchanged at 3.8%, around the 50-year low. It's about a 49-year low. The average wage paid U.S. workers rose 4 cents or 0.1% to $27.70 an hour on average of all workers. Now, most of us think that would be a nice number to earn. That is a pretty good dollar amount to earn per hour. Boy, it would be nice to be on that average. The 12-month rate of hourly wage gain slipped to 3.2% from 3.4%. Trade for precious metals has been trending lower as stocks have been more buoyant, with the Dow Jones Industrial Average up 0.15%, the S&P 500 up 0.46%, and the Nasdaq Composite Index up 0.59%. Trading not far from records amid supportive factors, including optimism around the U.S.-China trade pact. Now, it's hard to keep up with what's going on with U.S.-China trade because there's a lot of psychology and emotion involved. And from 1 week, there might be some not so optimistic views, and others saying everything's going to be great. So who knows how things are going to end in that situation? But the tide is in the optimism camp this time. Economic fears of economic contraction and exogenous political events like Britain's troubled attempts to exit from the European Union, an event that could roil markets if it cannot be done in an orderly fashion, has kept any slide in gold in check, market participants said. A technical sell-off will be there if gold does not break $1,305 by Monday. Chintan Karnani, chief market analyst at Insignia Consultants, told Market Watch, adding that apart from gains in the U.S. dollar and outflows in gold ETF, other factors are bullish in gold. The U.S. dollar, as measured by the ICE U.S. dollar index, edged up 0.1%, edged higher after the jobs report to 97.40, a gain of 0.1%, while the 10-year Treasury note yield slipped 0.75%. This is important because, as I believe his name is DJ, had mentioned, he said 0.997 is the number for the dollar index to where we're going to see gold really stave off. And it could, if this number stays where it is, we're going to see a continual decline in gold price. And I agree with him on that. This might be the number, 97 and up. But the only thing is, I wonder if other factors that could come into play that may not affect the dollar index, but could affect precious metals. Because again, the reason why I put that caveat out there is because of the volatility index and the fear. There's a lot of emotion involved in this, which is why technical analysis, though it is reliable to a point, has its shortcomings. A stronger dollar can erode appetite for bullion, which is priced in the currency, and rising yields can lower the comparative appeal of gold over other investments perceived as safe, like government bonds. Another metals trade, June palladium gained $13.60 or 1%. To finish at $1,345.90. Do you remember? Not too long ago, it was at $1,600. Crazy, the turnaround. Turning around after hitting an intraday low of $12.9250. The metal produced a weekly gain of 0.3%. And yeah, there's another article that says it leads to called the bubble that burst. Bull seed upside. July platinum gained 90 cents or less than 0.1% to settle at $905.40 an ounce with a weekly advance of 6%. May high trade copper was down 0.74%, lost $1.55. So there's where things are with the markets and with gold edging out. So I believe that really with this year, the way it is, anything below $1,300 in gold, I think is probably a bargain. And anything, below $15 for silver is a bargain for sure. I think anything under $20 for silver is a bargain, but it's a more volatile metal, the duality metal. Let's take a look at the prices as they stand right now, closing out here. And then we're going to look at the upper ticker here as it's moved up. Gold is at $1292.23. Silver is at $15.14. Platinum is at $903. And palladium there stands at $1,375. Wow, it's interesting to see. These metals when they move with the markets. I thought for sure that the floor for gold would have been $1,300, and silver's floor at $15 looks to be staying, even though it did creep into the 14s, high 14s. Others in the community think that both metals will be down this year through the continue as the year goes on. As far as the economy is concerned, well, the economy appears to be running along, humming along at its pace. And, with the GDP being revised downwards to 2 some odd percent, who knows? We could see 3% GDP growth before the year is out. But I think most of us agree that probably in time there will be a recession of sorts coming along. And as to the seriousness or the severity of that recession, who knows? But in between now and the time when that recession starts, I believe we're going to see the precious metal prices kind of move as the way they have, up or down some way or another, and we'll just continue to accumulate. But when a recession does occur, we could see the precious metal prices fall first, as they have done in other recessions. Usually they're the late bloomer when those types of things occur. But fear plays a big part, and who knows, for those who think that it's going to be worse than 2008, if enough people feel that way, well, then it could be that the prices for gold and silver may react a lot quicker than they have in prior recessions. Keep in mind that, a lot of more people are online buying precious metals. News spreads very quickly, even quicker than it did in 2007 and 2008. People, I believe, are more aware. Even if they're not into precious metals, they may find out very quickly about the nature of these metals and move towards them a lot quicker. If something like that were to occur. But nonetheless, we are sitting on a quite a docile market with the precious metals, and we will continue to pay attention and see what goes on. And I believe it's important to do so. Regardless, I don't think it necessarily is one of those things where you have to rely on the news of the day to continue to make purchases, because no matter what happens, I believe that we should act within our budgets and be fiscally responsible with our purchases and not be swayed by the news of the day. The reason why I think it's important to pay attention to the news of the day with the markets is because it further illustrates and it solidifies our thought process on the reason why we accumulate these metals. Yes, they are a hedge against economic instability, and the news of the day proves it. Gold is seen as a safe haven. when things are going fine, people tend to steer clear of that safe haven. There's not as much demand for it. It's only when times are tough when they start to look at gold and silver as that safe haven. So there you have it. So post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, share, comment, and subscribe.